So 4,000, 5,000 is very obvious to me, and that can happen rather quickly. And in the longer run, I'm definitely in the $10,000 gold camp. It's just a question of time. I assume we're gonna go through 50 and then probably rallying directly 60, 75. And in the longer run, yeah, once you see silver really going vertically, doubling, tripling in a very short period of time, that would be the signal for me to be really careful. And at the same time, I would like to see a gold-silver ratio maybe at 30 or at 15, ideally. That would tell us like
gold is trimming losses midweek, drawing support from sour market sentiment. After bouncing from 2-week lows just above $3,300, the metal remains capped below the 3330 area, now acting as resistance. That leaves the broader bearish trend intact, at least for the moment. Florian Grummes of Midas Touch notes that what stands out is gold's resilience. Every time the price dipped into the $3,250 to $3,300 range, buyers quickly stepped in, pushing it back toward $3,400. That kind of behavior, he says, is quietly bullish. We may be stuck in the summer doldrums right now, but the setup suggests that another leg higher will be only a matter of time. Grummes also highlights how gold has quietly outperformed for nearly a year and a half, at times even beating Bitcoin, yet it still hasn't captured mainstream attention. That's usually the hallmark of an early-stage bull market, strength without hype. The key level to watch, he says, is $3,450. A clean break there should pave the way for a quick retest of $3,500. Above that, the following psychological targets sit at $4,000 and $5,000. And looking further out, Grummes maintains the case for $10,000 gold is still very much intact. Silver, meanwhile, hasn't even started its explosive phase. Historically, silver tends to surge upward at the end of a cycle, sometimes rising by 200 to 300% within just a few months. That parabolic move hasn't happened yet. When it does, and when the conversation about gold and silver spills from cab drivers to grandmothers, that Grummes says is when you'll know the actual top is nearby. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Well, I mean, we are in this sideways consolidation basically since end of April, 4 months. Gold has been going nowhere overall, but at the same time, you can make a bullish case out of it because it has been holding up really well, right? I mean, you mentioned the big rally. Gold has been rallying from this triple low at 1615 nearly 3 years ago up to a new all-time high at 3,500 end of April. It's a massive move, nearly 100% move. And especially, of course, that rally since the breakout above 2075 February last year. So it's totally healthy and normal that it's been consolidating, digesting that big move since end of April. But at the same time, given that big run up, you would have maybe expected, or at least would have said maybe if we've seen a little bit bigger of a pullback, but that hasn't happened. Gold has been holding up really well here. And I think you can see at any time it dipped below 3,300, 3,250-ish, immediately big new buyers stepped in, and quickly a few days later, gold had returned and challenged again that resistance level at 3,400. So I think overall, still sideways. We are in a summer doldrums situation right now here, mid of August, tight trading range. But overall, I think it's bullish. I think it's just a question of time until this rally will continue. So just a little bit be a bit patient here, I would say. I mean, from a sentiment perspective, it's a very interesting rally, I would say, over the last 1.5 years. Most of the time, it never really hit mainstream, right? I mean, it kept rising. It kept outperforming, even outperformed Bitcoin to a certain extent. Yet you never really see that euphoria that I remember from that early bull run in 2001 to 2011. Simply because I assume there's so many other options, and investors are so distracted with tech, with AI, with all these kind of things. So we've seen, like, if you look at the classical kind of sentiment index, I use the optics from Sentiment Trader. You've seen some sentiment peaks, but it never felt like the headlines flying around your head and talking only about gold. So it still feels like rather muted, and like there's no real interest. I mean, it was very clear that the main part of that rally has been made in the physical gold market in Shanghai and in China. And only rather recently, in the last 6 to 9 months, you've seen ETFs in the Western world slowly but surely starting to buy. But they're far away from any holdings that we've seen at peak gold in 2011, for example. So I think there's still a lot of room. If you take out this, or if once gold can rally above 3,450, I think we very quickly going to test that all-time high at 3,500. Give or take a few days, a few weeks back and forth, but it will break out above 3,500. Next round number is 4,000. I think since we are in uncharted territory, you need to use these big round psychological numbers as next targets. So 4,000, 5,000 is very obvious to me, and that can happen rather quickly. And in the longer run, I'm definitely in the $10,000 gold camp. It's just a question of time, right? So this can happen if this is a classical bull market, at the end of that bull market, you should see that market doubling in a few weeks. And that will tell you now it's the end. Now it's the time to leave that sector, So that happened in 1980 in January, when gold went from 400 to 800 and something in a few weeks or in a few days. That was the signal. Now this is the grand finale. That's the end of this bull market. So if gold rallies to 5,000 and then in 2-3 years, within a few days or weeks, it doubles, that's telling you, okay, here we are. Now it's time to leave that sector. But this has happened. This has not yet happened, obviously. So we are far away from a real blow off top here, but that will come. Usually that's what you see in a bull market at the end. And by the way, silver hasn't even showed either. So, silver is especially supposed to do that kind of crazy stuff at the end, right? Going completely nuts, going completely vertical, and not only doubling, but like rallying maybe 200-300% in half a year, something like this. That will signal us, okay, now total euphoria, total exaggeration in the sector. Everybody's in, all your taxi drivers and grandmas are talking about gold. That's when you want to leave the sector completely, but I don't think we are there yet at all.
Florian Grummes points out that silver's rally this year looks very different from the explosive spikes of the past. Instead of shooting straight up and then collapsing, silver has been climbing in measured steps, rising, pausing to consolidate, and then pushing higher again. According to Grummes, that's a far healthier pattern and a strong sign this rally could have real staying power. If silver continues to move in this structured way, it stands a solid chance of breaking through the long-term resistance level at $50. That level has only been tested twice in history, and rather than stopping there, Grummes believes silver could dash towards $60 or even $75 once the breakout occurs. Still, he cautions that the ultimate warning sign will be when silver goes parabolic. A sudden doubling or tripling in price over a short window would almost certainly mark the final blow-off top of the cycle. At that stage, the gold-to-silver ratio would likely crash toward 30 or even as low as 15, signaling extreme euphoria in the market. That's when disciplined investors should be prepared to step aside. For now, though, Grummes emphasizes that we're far from that danger zone. The current market behavior demonstrates steady, sustainable growth rather than reckless speculation. As long as silver continues to grind higher through this healthier pattern, the setup favors much higher prices ahead. Let's get back to the interview.
I think it's a very accurate assessment because, look, I'm right now here in Germany coming to you, and the German government took out the big bazooka earlier that year when they announced a big trillion debt package here just, to finance war and buy weapons and a few other infrastructure projects. And at the same time, the complaints here in Germany about rising prices at the grocery are constant. So it's exactly that what basically the cracker boom describes. On the one hand, governments, central banks devaluating the fiat currencies by printing more and more currency out of thin air, and at the same time, slowly but surely, the population, the people waking up to the fact that, they're losing purchasing power. And that game is continuing worldwide. You see it in America, you see it in Canada, you see it in China even. And of course, you're also in the Eurozone, where they have already lowered interest rates since, I think, half a year already. So this is the main driver for the gold rally in the end of the day. We have, of course, in the short term, these peace negotiations in Ukraine. I think it's not a secret that there is a certain war premium in the gold price that has been building over the last 3 years. But then again, at the same time, the points that we just mentioned will bring in new buying immediately once you see a little bit of a pullback here. And the central banks in the emerging markets in Asia continue to buy, and I think also big money in the Western countries now is buying any pullback, because it's very obvious gold is in a bull market and your job is to buy the dip. So anytime we see a little bit of a pullback here in gold, I think new buyers will step in. The generalist kind of value investor is already aware of what's going on in the gold sector, and with especially the gold producers at these high gold prices. And you can see at the same time, like, look, all these financings the last few weeks and months. I mean, most of them not only got completely sold, but also they doubled the size, right? I mean, we haven't seen that in that extent for a long time. And usually in the past, it used to be a sign of like, oh, be a little bit careful and cautious. Usually that is signaling a top, but we see actually the opposite here. I mean, the mining stocks holding up really well, some of them making new highs. Gold is holding up well, and I think it's still just rather the beginning. And if we really zoom out and, for example, you look at the TSXV over the last 20-25 years, I mean, we are far away below that all-time high from 2007, before the financial crisis, when the Toronto venture mining stocks topped out back then. So I think there's still a long way to go. We haven't seen any takeover frenzy in the sector. We haven't seen silver going vertical. I mean, there's so much good stuff still to come down the road, I think. I don't think we have to be worried here about a big top and a turn in the market. A few weeks, a few months of more sideways consolidation and one nasty pullback to shake off all the weekends. Yeah, that's always possible, right? But I don't think that this bull market is anywhere near its end. So it's looking pretty good. What we're seeing in silver over this spring and summer is strong rally overall, but it's not this vertical spike that you usually have seen in silver in the past, where it suddenly goes totally banana for a few weeks, and then usually that's the end of a rally in the sector. No, it's been creeping higher, digesting, consolidating, and another push higher. Again, a few weeks digestion, sideways consolidation, and then another push higher. Very sustainable, very bullish in the longer run. I think it's telling us that there's much more to come here. So I think that the more it behaves like that, the more likely it is actually to break through that $50 without any big consolidation or correction around that big round number, which is obviously long-term resistance because it's the all-time high. And we've only been 2 times testing this number. But the more it behaves like it's behaving right now, I assume we're going to go through 50 and then probably rallying directly 60, 75. And in the longer run, yeah, once you see silver really going vertically, doubling, tripling in a very short period of time, that would be the signal for me to be really careful. And at the same time, I would like to see a gold-silver ratio maybe at 30 or at 15, ideally. That would tell us like complete euphoria. Okay, now we have to leave the sector. But again, we are far away from that.
Gold has cemented its place as the standout performer of 2025, leaving equities, bonds, currencies, and even Bitcoin trailing in its wake. So far this year, the metal has gained an impressive 28%, making it the best-performing asset class, according to UBS's Chief Investment Office. On August 18th, spot gold was trading at $3,337 per ounce. UBS now expects the rally to continue, forecasting a price of $3,500 by December. Looking ahead, the bank has also revised its 2026 outlook higher. It now sees gold at $3,600 by March and $3,700 by both June and September next year. That's a clear signal that UBS expects the bull trend to stretch well beyond the near term. Several forces are driving this surge. Concerns over U.S. fiscal sustainability remain at the forefront as debt levels continue to spiral higher. At the same time, questions are growing over the independence of the Federal Reserve, especially as political pressure intensifies during an election cycle. Add in persistent geopolitical tensions, and you have a recipe for ongoing demand for safe haven assets. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Additionally, if you are interested in Bitcoin-related news, consider subscribing to our other channel for more updates. Thank you for the support, and I hope you enjoy the video.